definitely something to mark out. TARC, on the back of its quarterly update, stock is up and away, 3% higher. Angel One, again, yesterday was a very strong move on Angel One, and just maybe a little bit of profit booking despite a good Q2 update coming in from Angel One. Bank of Baroda, what stellar set of numbers, especially on a sequential basis when you're looking at it. 4% on deposits, 4 to 5% on deposits, 5 to 6% on, you're looking at good growth on loans as well on a sequential basis. Stock is up and away, 2.5% higher. But a lot of these dominated by financials. Of course, IT was one on the benchmark which has done well. IT stocks are doing well. But outside of that, some of the ones on especially in financials are doing fairly well on the back of their updates. Some of them doing well, some of them doing badly, but clear movers on the back of their Q2 updates.
Absolutely. Some of the other losers includes Honasa, coming in after news that their UAE assets have actually been seized. And then you've seen that kind of a down move on a Honasa, down about 4% now. But across the board, there is pain coming in. Can't say it's just one-off stocks or sectors. Even on the broader indices, you have that pain coming in. I just want to see how some of your capital market play is doing. Angel One had updates today. BSE now has made it clear they'll go with Sensex 30 for their expiry play. Angel One coming off after those business updates. BSE back in mojo. It had a soft start to the day, but definitely back in, in the favorites list now, about 4.5% up. So another rare sort of upside that we're seeing today. But let's talk about the Nifty and what you should do on the Nifty and the Bank Nifty this afternoon. Kunal Rambia, founder of The Street, is joining us on the show. Kunal, very good afternoon to you. What is the strategy you would formulate when you're seeing this pattern as often? Afternoon trade means trouble.
Good afternoon, Tamanna. Good afternoon to all our viewers. So now, just recall the previous Friday discussion where the Nifty was trading at around 26,150 and Neeraj Bhai just asked whether I'll be comfortable buying Nifty, and I made a statement that time that, see, the risk-reward ratio is unfavorable for any longs at that point in time, right? Because it was clearly making higher top, higher bottom. And I had also mentioned about 25,250 being a comfortable zone. Right now, the Nifty spot is trading at 25,000. It's offering me even more better comfort at this level. But as of now, because it's trading near to the low of the day, I will not be keen to accumulate, but the levels which I'm watching out to initiate buy are 24,800 levels, which is the previous bottom we saw somewhere on the 9th of September. I think that can be a good level to think of initiating buy. The stocks have already come down. They are trading near the lows and they are near to the support. So I think buy on dip can be a good strategy as of now. I will not be jumping in and buying, but yes, now the favor will be more on the long side. So on Nifty, 24,800 to watch out as a good support.
Okay, so that's on the Nifty. What about your picks, Kunal? Let's just get your picks very quickly. If there is anything that people can watch out for the remainder of the trading day.
So yeah, Tamanna, the first counter which I'm sharing right now is the Marathon Next Gen. Now this counter is presently trading at 656, 657 kind of levels, and the good support is available on chart at around 640. Today's low itself was 640. So I think with the stop loss of 630, one can initiate a buy. It's not just for the day, but it can be for the next 15 days. The target can be 715 to 720. And the second counter which I like the most is IREDA. Now this counter is just been sideways consolidating near the support itself. Today's low was good support 218. So with the stop loss of 215, one can initiate a buy on this. The immediate target can be 235, but the positional targets can be 260 and 265. So yeah, these two are the positional as well as short-term targets on the counters.
Okay, well, those are the two picks, but geopolitics will dominate, and this is something that Jeffries has also said in his Greed and Fear report. They say geopolitics remains the main risk to markets at present. Risk for markets, of course, is that Israel attacks Iran in a more direct fashion. Biden administration calling for ceasefire and yet providing funding to Israel is akin to tail wagging the dog. I found this particularly interesting as a quote coming in. But they go on to say that the larger risk is if Iran closes the Strait of Hormuz or attacks U.S. military facilities in the Gulf, certainly a reason for investors to maintain energy and gold exposures in portfolio as well as cash. Let me reiterate that. Maintain energy and gold exposures in portfolios as well as cash. The Asia ex-Japan long-only thematic portfolio remains 49% invested in India with 10% exposure to China. Portfolio remains primarily geared to the long-term domestic demand story in India. So, even as we speak about FI money or maybe hot money flowing to China right now, the long-only theme is with India, and we will be well placed even if things go further south. Now, just to tell you what US has also said on the conflict, Biden had a statement saying that they are still discussing what happens next, and that also had caused some fear. So that's the broader picture. But the fact is that right now there is some concern in the market about what to do next. Aditya Shah is joining us, founder at Hercules Advisors, and we'll speak to him in just a second. But meanwhile, Kunal, the other factor that we're looking at, apart from the index, and you told us that below 25,000 there could be some opportunities on the Nifty. What about the Bank Nifty? Would you be looking at the Bank Nifty right now constructively at all?
Absolutely. So my more comfort is actually on the Bank Nifty front. Again, we somewhere closed last week at around 53,800, and right now we are at 51,500. It's almost 2,000 points down from that level. And the trend which I'm foreseeing from October 2023 so far is offering a fantastic support on the Bank Nifty, which is at 51,200 kind of levels. It's just 300 points away. If you ask me to pick up one out of two sectors, I'll go ahead with Bank Nifty first because of extremely favorable risk-reward ratio. So yes, the counters like Axis or SBI can be watched out for the next rally. But yeah, again, as I said, near to the support is just not the reason for us to buy. We'll just wait for a bit of consolidation for a day or two. And if there is a momentum, I think Bank Nifty can offer much better opportunities.
Okay. So Bank Nifty has those opportunities. What within the Bank Nifty? I'm keen to know, Kunal, your view on Bajaj Finance. I won't ask you about Bajaj Housing Finance, not enough data on the charts. But let's talk about Bajaj Finance. The quarterly updates have shown some signs of weakness, but there were some notes which are fairly positive today on it as well. Morgan Stanley has a target price of 9,000 rupees. Do you see that coming in at any point? And are the current levels one at which you would look at a Bajaj Finance?
So Tamanna, I'm honestly lucky to come again on our channel and keep discussing about the counters. Last week only Neeraj Bhai was asking about Bajaj Finance and the counter was trading near to 7770. And the only observation which actually saved was January 2024 high was 7770 and we are near to that level. So I was not really keen to buy and see the decline in just 2 days. It's near to 7,150. Now from this level, again, it's in between, neither near the support nor near the resistance. I'll avoid this counter for now. I think there seems to be a little more room on the lower side. 6,800 to 6,900 is a level to watch out for. If Bajaj Finance reaches near those levels, again, I'll definitely think of initiating a buy. But as of now, I'll avoid this counter, not catching the falling knife for sure. For a trader also, it's advisable to think of shorting opportunities. Stop loss can be 7,400. Targets, as I mentioned, near the support, that 6,800 can be good trade for Bajaj Finance.
Bajaj Finance, while the numbers weren't, anything like they have been over the last at least 10 odd quarters, it's the lowest sequential growth number. But, brokerages, analysts, all of who are quite constructive in that sense. Citi had a 11% upside. Of course, stock has tanked nearly 4%. Post that, so now likely that upside is 15% plus. But the reasons for that is what they believe. While AUM growth has moderated, Citi is saying it's moderated on expected lines. The new loans booking or new loans booked have fallen on a sequential basis, but that's on an elevated base. They're expecting margins to come off by around 14 bips or thereabouts in Q2 FY25. They're watching out for that. Credit costs are also expected to be elevated. So honestly, the positives here are limited, at least the way Citi is looking at it, even though target price is at least 8257 is what Citi believes. Morgan Stanley too, very similar. They've maintained overweight. They believe loan growth was healthy and was above their estimates. They're expecting Bajaj Finance to clock a 27.5% growth in FY25. Customer acquisition, this is one piece which stood out, was better than the target set by Bajaj Finance. Likely for full year FY25 will be better as well. And Q2 FY25 will be weak is what they believe due to higher credit costs. They're expecting credit costs to be hiked, in fact guidance to be hiked, but they're expecting FY26 to show good profitability. 20% plus is what Morgan Stanley believes. 9,000 is their target price. So some bit of upside from here is what Morgan Stanley sees on Bajaj Finance. Of course, we'll take views on that. But let me switch focus to the one sector which has been extremely resilient through the day today. We have the theme of the day, the IT pack for sure. It's jumped in trade. Rucha joins us with what's on, because Rucha, we also have results starting next week, and that will give us some indication as to how recovery is playing out.
You're right, Hersh. So IT earnings season is now kicking off with TCS reporting on the 10th of October. But we'll briefly have a look at what things will be to watch out for in this results. Now, first, starting with the second quarter expectations. Well, it is believed that second quarter is largely strong, and therefore the growth numbers will be similar to the quarter one or even slightly better. Next thing to watch out for is the demand environment and the commentary of the management around the discretionary spend. As we can see over here, Infosys is expected to increase guidance by 50 basis points. So this is the expectations around the company. HCL Technologies, however, is expected to maintain their FY25 guidance. Now, remember, HCL Technology had guided at around 3 to 5%, which is like mid-single-digit growth in terms of revenue. But moving on to TCS, well, this one is expected to perform the weakest amongst all because of the BSNL deal ramp-up number one, and also TCS had told the investors in the midweek, past few weeks, that the numbers will largely be coming from Indian business and will be soft in terms of revenue from the BFSI vertical, which is the banking vertical. Wage hike is likely to affect margin for most of the companies except for TCS, because that was already accounted for in the first quarter. But moving on to the other expectations over here, green shoots from demand environment, as I said previously, and the discretionary spends, which is under pressure over the last few quarters, is to be watched out for. Moving on to what clients are saying after the US had cut the Fed rate is something critical, because this is the first quarter after the US, cut the interest rates, and hence how it can affect the client budget is what is to be heard from the management commentary after the results. There are two companies which are specifically to be watched out for under the new management. Is number one, Tech Mahindra. The management here had given a 3-year growth guidance and an EBIT margin guidance of around 15%. And the other company over there is Wipro. Moving on to the calendar of the IT earnings, well, we have TCS reporting on the 10th, followed by HCL Technologies on the 14th, Wipro and Infosys to report on the same day on October 17th, and this is to be concluded by Tech Mahindra to be reporting on October 19th. However, LTI is not yet out, but we expect it to report around the same time. But yes, this is what largely to be watched out for in the IT demand environment, margin to be largely impacted by the wage hikes.
Okay, going to be fascinating, because going to listen to some more commentary as to how progress is being made on especially discretionary spend and demand. The other piece which I found interesting was Tech Mahindra declaring numbers on the 19th, which is a Saturday. Believe some amount of time required to digest numbers, Tamanna, it seems.
Yeah, maybe after all. But, I think the bigger question really today is going to be, Hersh, what are you going to do in this market, knowing that there are 2 more days to go? And this is such a volatile time. Things are changing almost every few hours. So I'm really wondering how you would play this market. I mean, Kunal talked about levels, but beyond levels, what are you going to do? Vijay Chopra, in fact, joining us now. Vijay, great to have you this afternoon. I'm wondering, what are you doing? Is this a time to sit on cash, sit on the sidelines, look for opportunity, and especially before a weekend? How do you make that decision?
Tamanna, I would recall that day when you were saying that, are you excited about GRSC? It was running, the defense counters were running, a lot of railway counters were running. And I said that, these are the markets where you should stay away from excitement, high beta, and keep on booking profits and going into more fundamental, subtle stories, which probably can give you a better safety net. So definitely, these are tough markets to trade. But again, be with the conservative ones. I think that IT, pharma are certain sectors which I'm looking at. Metals is something which I like. And, I would definitely like to nibble into the likes of Hindustan Copper, National Aluminium, Hindalco, Tata Steel. These companies have already corrected, and these are great companies. So keep on nibbling into good, fundamentally strong stories. And I think that the commodity play is here to stay, especially the metals. We have to understand that why it is happening. It is happening because China is now giving liquidity injections. They are, trying to propel their economy, and the government is trying to give a lot of stops to manufacturers, and because they've been lagging behind in the last 4-5 years. So China is doing this, which probably might help at least the metals to do well. And I would stay with the conservative ones, as I said. I like IT, I like metals, and it's better to stay away from high beta. And we are looking at the way the companies are getting battered. So just at times, sitting at...
Vijay, what are you liking in IT? Because the Nifty IT has given up all its gains, pretty much. When we started the show about 20 minutes ago, the index was about 0.5% up, but even that's not holding on. What are you liking in IT? Will you go for the frontliners, or you'd look at the mid-cap?
Well, Tamanna, I don't really care if at all, the index loses some points, and I'm talking about overall the situation of the sector. It's a conservative sector, we have to understand. And when the dollar is strong, and these companies are reviving back from all the lull we have seen in the last 2-3 years. So be with the top rank companies. I think that the likes of Infosys and TCS and HCL Tech and Tech Mahindra, these are great companies. And maybe few select ones, LTI and all, in the mid cap space. So these companies are good, safe havens. If at all you're able to save money, and it doesn't just the money vanishes in such markets. People who are sitting on high beta stocks, the money vanishes, and they are not able to take the losses, and they ultimately book the losses. So actually they lose money big time. So I would say that stay with the conservative sectors. As I said, I like metals, I like IT, and there's no problem as such. If at all even a big company loses some points, but doesn't matter. If you are with the TCS, so you are much more safer than any other sector at this point of time. Rather, as I said, if at all you get opportunities in metals, go and buy metals. I think metals should do well. And select banks, like Bank of Baroda, SBI, these are at good levels. And I would say that, select banks also I like. We have a credit policy around the corner next week. So I'm expecting some cut there, and in the financial sector and the interest rate sensitive should do well. So select banks, top rung ones, IT and metals are my choice.
Okay. Now moving on to the brokerage note of the day. IT metals is Vijay Chopra's choice, but the interesting note out from HSBC on Bajaj Housing Finance. Remember, Bajaj Housing Finance had business updates out today as well. Relatively muted, I would say, but what was interesting in this note, and Puneet joins us for more, is while everyone so far has been very, very bullish on Bajaj Housing Finance, HSBC has a contrarian view.
Well, definitely, so as you said, the update wasn't as bad, a good growth on a year-on-year basis, but that's the point that HSBC has picked. They have initiated a buy, they have initiated coverage with a reduced rating with a target price of 110 rupees per share, which is a 25 to 27% upside from the current market levels. Now, they say that, while HSBC is acknowledging the strong franchise that, Bajaj Housing has built in this time frame, which is very high quality as well as becoming the second highest, housing finance company in terms of AUM. They have mentioned that, the market is valuing the strong growth at a very high multiple, and it says that this growth might likely moderate from this particular point of time as well. They have said that, the housing loan segment, while, will still be higher than, the industry and as well as the system, the growth levels might be lower than what we've seen in the last 3 to 4 years. Apart from that, they are saying that, there will be several pressures on the return on assets for the company. Now for FY24, it was around 2.4% of ROA that Bajaj Housing Finance reported, and it's mentioned that this was based on three key metrics which worked in its favor: optimized AUM mix, operating leverage, as well as muting credit costs. Now these all things might not be in its favor in the going 3 years. They are mentioning that margins would likely compress, credit costs would also normalize, while the benefit from operating leverage might not be as much. Finally, they're saying that they're expecting an EPS growth of about 17% between FY24 to 27. That's lower than the 41% they reported in the preceding 3 years. And mentioned that while other large NBFCs with strong and higher ROE metrics as well are trading at a much steeper discount to someone like a Bajaj Housing Finance. So they are valuing it at 4 times price to book for FY26 specifically, versus the 5.5 to 6 times that is trading currently. And that's the note on HSBC on Bajaj Housing Finance. Back to you.
Well, thanks for that, Puneet. Very interesting note, but let me quickly address some numbers which have come. IDFC First Bank declaring very strong numbers when it comes to growth, both on advances as well as deposits. Your advances growth has come in at 6% sequentially, 21% YOY. It's now, the advances book stands at 2,22,188 crore. You're also seeing deposits, which is even better. You're looking at 32% growth YOY in deposits, 6.5% sequential growth in deposits. A lot of it being CASA. So out of the almost 13,000 crore rupees of deposits garnered in this quarter, you have almost 11,000 crore rupees garnered through CASA. So essentially that CASA franchise really shining, at least in this quarter for IDFC First. And if they are able to continue to repay some of those high cost borrowings that they have, which they likely are doing at a faster pace, in that case, it could very well mean that your margins may just hold up or even improve in an otherwise very difficult quarter. They've done well on deposits, definitely fighting on the rates side of things. Let me bring on board Aditya Shah. Aditya, first off, your view on something like an IDFC First, before I take your views on both Bajaj Housing, Bajaj Finance, HDFC Bank. So first, IDFC First, right off the bat.
So numbers seem to be pretty good. What seems to be hitting the system right now is most lenders have slowed down the loan growth because the deposit growth is not catching up. And that's the right thing to do in terms of saving their franchise per se. But in the shorter term, with respect to the stock market, that is not something that the stock market would really like. And I expect all of these lenders to undergo some bit of time correction per se, not price correction, but time correction per se. First point. Second point, the numbers from IDFC First Bank look to be okay. There's no problem per se. I'm not too happy on the CASA growth, spectacular growth in CASA, because CASA can move out very, very quickly and the bank has no control over it. So net, okayish kind of numbers, nothing to get surprised about. The stock has corrected massively from about 90 rupees to about 70 rupees, but still trades at about 2 times price to book, which is not so cheap per se, in a time where slippages and NPAs are bound to rise over the next 1 or 2 years. So okayish, neutral on the stock. Performance is better than some of the larger banks, but valuation seems to be really very expensive.
So, Aditya, hi. I just wanted to get your view. Actually, there's so many updates on the financials today, and I want to ask you about all of them. HDFC, Bajaj Finance, M&M Finance, not a pretty picture at all right now.
Bank of Baroda.
Bank of Baroda. But producers asked us to take a break. So we'll take a very short one and we'll come right back. Stay tuned.
All right, welcome back to India Market Close. Of course, there's plenty to speak about. Aditya, let me come back straight to you. Your key takeaways from all of these earnings, at least provisional numbers coming out from the financial space.
So the picture doesn't look too great. We've seen Bajaj Finance not report very good growth. We've seen HDFC Bank particularly slow down their loan growth. They need to cover up for their loan to deposit ratio, but still a 7% growth doesn't bode a good picture for the economy as a whole. If top banks and the top NBFCs slowing down their loan growth, then there's a problem that we are pointing towards. The micro lenders also, they don't seem to paint a good picture. The asset quality is deteriorating for some of the micro lenders. So net, I would say that not a great time for lenders per se. But then you know what? Bad times are great opportunities to buy good quality stocks. And I would not be surprised if over a period of next 2 to 4 quarters, companies like Bajaj or HDFC or companies like ICICI bounce back.
Aditya, let me try and play devil's advocate here, because Bajaj Finance, while possible slowest growth sequential in the last 8 to 10 quarters, maybe even more, but just in terms of their guidance, they're guided for 26 to 28% AUM growth. To clock that, they don't have to do much anymore. They just have to do what, 6.5% sequential over the next 2 quarters in an otherwise we're going to go into the festive season, so that is obviously going to aid their numbers. Shouldn't be too much of a concern. They will come back and say that, hey, this is what we guided for, we're going to achieve it.
You know what, the expectations from Sachin Tendulkar is always high, and similarly with Bajaj Finance, the company trades at about 6 times price to book, and the market is not really happy with 20% growth. We've already seen the stock undergoing time correction for the last 2.5, 3 years, where the stock is literally trading at about 7,000 or so levels. The market, for the stock to break the 7,000 levels and go higher, they need to surprise the market with higher growth. Of course, Bajaj is known to keep their asset quality pristine. While keeping that asset quality pristine, Bajaj needs to ramp up its growth. Only then the stock price will start to move higher. Otherwise, there could be a time correction even longer per se. So Bajaj is in a position where the loan growth has slowed down from the 40% that we were used to over a period of last 3 years to now about 20-25%. And the market is adjusting to that fact by having a time correction per se. So in my opinion, Bajaj Finance is an excellent quality franchise. They will do exceptionally well from here on as well. But there could be a little bit of pain in the shorter term before the stock really moves on.
Right, Aditya, you track financials closely. So last question with regard to just asset quality in the system. What are you seeing? You talk to managements, often. Just talk to us about what they are seeing, what you are seeing in the system, especially SME, MFI from an asset quality perspective. Is it going to be 2 quarters of pain or more? How should one look at it? And what are some names which you feel may be insulated in comparison? Just very quick.
So MFI cycle has turned, and MFI asset quality is deteriorating sharply across all lenders, not only one lender, across all lenders. So I would suggest everybody to stay away from micro lenders. The party has not bottomed out. The party will bottom out at least 2 to 4 quarters away, and there could be an opportunity. When these stocks start to trade at price to book of less than 1, then there's an opportunity here. What type of lenders could exactly benefit from this? I think, in my opinion, the top lenders could start to benefit here because the smaller lenders will start to hit asset quality woes. And that's what the market is even worried about on companies like IDFC First Bank, where even after those strong numbers, the stock price is not moving up. So I would try to bet on larger banks, for example, an ICICI, HDFC, or an Axis, or a Kotak. Even for that matter, SBI also would be my bet, rather than going towards the smaller banks, MFIs, or PSU banks per se.
Okay, views coming on financials thick and fast, because some of those stocks really moving thick and fast. Let's quickly switch focus from financials to new age. Mamaearth, parent Honasa Consumer. Shares have fallen 4.5% nearly now after a Dubai court upholds asset attachment order in the UAE. My colleague Mahima joins us to give us more details on that. Mahima, over to you.
the litigation between Honasa Consumer and RSM General Trading has been going on since quite some time now. And RSM General Trading filed a lawsuit in Dubai court stating that there is unlawful termination of its distribution by Honasa. Now, because of that, RSM General Trading applied for a precautionary attachment to freeze assets of Honasa, and RSM requested cancellation of trading license of Honasa Consumer in Dubai. But on June 6th, the Dubai court allowed the attachment of Honasa Consumer Limited's assets in UAE. However, they rejected the request to cancel the trading license of Honasa Consumer in Dubai. Followed by that, there was a judgment on 1st of October also. The Dubai court rejected both party grievances against the precautionary order, and the attachment of assets is still upheld. However, the trading license of Honasa Consumer will not be cancelled is what the order says. So this is the update coming in for Honasa Consumer.
Okay, so Honasa Consumer taking a tumble there, 4.5% down. And, it's the markets though, which is really the big worry. Pull up the Nifty, and let's pull up the Nifty contributors back below the 25,000 mark. Okay, just struggling to keep its neck above the 25,000 mark. Big pulls coming from HDFC Bank, the biggest hit. Nestle, look at the slide in entire FMCG pack. ICICI Bank, RIL. Now, if you have heavyweights like that, then to what extent will an Infosys, ONGC, I think an Infosys and a TCS on the other side is sort of balancing on that seesaw. But Kunal Rambia, I'm going to come to you on one heavyweight, which has really been having a tough time. Is it the charts? Is it the fundamentals? I'm not sure. But let's talk a bit about Reliance and the kind of pressure that we're seeing. Do you see that deepening?
Again, at this point in time, Natasha, I'm very comfortable. The only reason on the chart being, we saw the similar bottom somewhere on 13th of May, where the counter actually bottomed out near 2750. The same bottom was seen in June and back to the same level. Today's low is almost near to 2760. It's right now trading at 2775. I think this 2750 is a strong support which the counter has witnessed for the entire 2024 so far. By any chance, if counter gives a decisive closing below 2750, then definitely I'll turn cautious and I'll think of finding the short opportunities. But otherwise, this is the zone to watch out for buying opportunity. Let it consolidate for a day or two. I think it can offer good longs from the present level.
Okay. Aditya, I want to quickly try and have your take on IT, because that's going to be the focus for maybe the next couple of weeks at the very least, till large banks start declaring numbers as well and financials come back into focus. Your views with regard to what we can expect from the IT sector, because that's one sector out of the 11 gainers on the Nifty 50 today, 4 being IT, and any significant gains in terms of stock price action is coming in IT, at least on the benchmark right now.
So basically it is sell India and buy IT trade that is playing out today. In my opinion, all IT companies will not report very strong kind of numbers. Weakish set of numbers is what I am expecting. The guidance is something that we will watch out for, but I don't think that any of these companies will point out to bottoming out of the pressures that they are seeing in US and Europe. So I would see weakish kind of numbers and very weak guidance per se from all of these companies. All of these companies will start to report good set of numbers from the middle part of 25, when the exact turnaround will happen. But right now at this stage, nothing positive to expect from any of these IT companies per se.
Aditya, I just want to understand, why do you think FMCG is having such a tough time today? It's a defensive play on worst days. I mean, I can understand what's happening in oil and gas. I can understand IT ahead of the numbers, maybe seeing relatively better. Metals is fine. But why is FMCG getting so hit?
So, as I said to you, my concern with all the lending slowing down is that there could be a real chance of the economy also starting to slow down after a period of 1.5, 2 years of strong traction. And we would start to see volume growth dropping for a lot of these FMCG companies per se, is in the rural side of it. We've also seen the auto sales numbers slowing down, where Tata Motors has now practically shut off their factory for about 2 to 3 months because there's a lot of inventory that is piling on in the system. So there's a real chance of a little bit of slowdown coming in. And that's why, in my opinion, a lot of FMCG and consumer companies are starting to get hit. But you know what? I've been waiting for this correction for a long period of time. The market was going up one way, and this really corrects the frauds that is building up in the market. So in my opinion, this is positive for the market, and I'm really very happy that this correction is played out. And the graphic that you really played out right now, that the Nifty is set to clock the worst week in the last 2 years, it is good for the market, and and the market will really move on from this over a period of next 6 months.
So, you're happy that market is down and Nifty is set to clock its worst in 2 weeks because you're saying the correction is needed. Is this, how much more of the correction then is the question, Aditya?
So that is anybody's guess, depending on what happens in the Middle East. If there's a full-fledged war, we could see a little bit of correction per se. But there's a good opportunity that is developing in the market. A lot of money that was on the sidelines can start to get deployed now. And I feel that a little bit of sanity is starting to return back into the market after the exuberant bull run that we've seen. So in hindsight, you will see that this was a great buying opportunity, as was the volatility when the stock market, when the election results came in and the market had slipped down back. So try to buy good quality stocks and try to SIP them, and don't worry too much about the short-term moves that are going on.
You're suggesting that markets will bounce back. What are you buying then right now?
So we are buying the large private sector banks, AMCs, the asset management companies per se. They look very good for us in the explosion of asset management that is really happening. Insurance companies look very interesting to us. Something like an HDFC Life looks very interesting to us. If you look at the pharma side of it, they also look very interesting. Somebody like a Krishna Diagnostics within the diagnostic space, or a Syngene within the CRAM CDMO space, or a Piramal Pharma, they look very interesting to us. If you look within the chemical space also, we are deeply interested in the chemical space. Somebody like a Deepak Nitrite will do exceptionally well from here on. So it is stock by stock where you feel that the companies could do really well over a period of next 2 to 3 years. That's where the buying opportunity really is. And you have to go bit by bit, slowly SIP, because there could be a longer term correction that could come if the war in the Middle East could flare up, which could prove disruption to the crude oil prices.
Okay. All right, let's shift our focus to Avenue Supermarts. So you have, one of the points that Aditya talked about was fears of economic slowdown, and some of that may be coming in from DMart's Q2 business updates. They're underwhelming, and brokerages are split on what to think about the stock. Mahima's telling us more.
Right, so Avenue Supermarts Q2 FY25 business update has been a bit underwhelming, and sales growth was at 14% versus that of 18% in Q1 FY25. They've added 6 new stores in Q2, which takes the total store count to 377. And if we see 12% YOY net store addition in Q2 FY25 versus that of 13.5% in Q1 FY25. And 5-year CAGR has been around 18.9%, which is similar to Q1. However, the average for FY24 was roughly 20%, so it's below that average. And revenue per store has been a tad bit higher at 376 million. However, YOY revenue per average store was up only 1.2% versus that of average of 5.9% in FY24. Now, multiple brokerages have also come out with their view on Avenue Supermarts, and they have, however, maintained their rating as buy or outperform or overweight, but the commentary on Q2 seems a bit negative. Macquarie has rated it outperform with a target price of 5,600, and it is building an 8.1% standalone EBITDA margins for the company. Goldman Sachs has maintained sell with a target price of 4,050, and what they're saying is that rapid scale-up of quick commerce is adversely impacting the same-store sales growth for Avenue Supermarts, and that the risk that FY25 store addition might end up lower than management guidance is high. And they've cut 25, 27 and 26 and 27 FY estimates by 2%. Now, Morgan Stanley has also rated it overweight with a target price of 5,769. What they're saying is that the growth is below expectation, but they await management clarification on slower growth rate. JP Morgan has also rated it overweight with a target price of 5,400, and what they're saying is that moderation in revenue is due to extended rainfall and, of course, supply chain disruptions, and they find DMart maintaining its competitive pricing versus that of peers. Now, Bernstein has also rated it outperformed with a target price of 6,300, which is an upside of 27% from its yesterday's closing. What they're saying is that DMart standalone has missed estimates in the past 5 quarters. However, DMart's consolidated revenues have outperformed the estimates in the past 5 quarters. And the key driver for consolidated revenue growth is DMart Ready, which has grown at a CAGR of 82%. So this is the overall view of how Q2 FY25 business update for Avenue Supermarts has shaped up. Of course, we'll wait for the numbers to come in once the results are out, but the reason why the stock is tanked is because of the lower than expected performance for Avenue Supermarts in Q2 FY25.
Okay, Kunal Rambia, Avenue Supermarts, HUL, Nestle, what are you seeing when you're seeing all of these, consumption sort of stories today?
Tamanna, again, these counters are definitely in a good trend, but if I look at just DMart per se, the volume which I'm witnessing on the chart is massive. And this volume is probably the first ever recorded volume of entire 2024 in a day itself. That's really huge with the negative candles. So yeah, I'll turn cautious on DMart for now. The support is 4,700, which we saw somewhere in June and July counter consolidating near that low itself. So yeah, that seems to be the good support, but I'll not be keen to buy this. But per se, if I look at Hindustan Unilever, I'm more comfortable because trend is very clearly positive near to the previous bottom. So all other counters are okay, but I'm very cautious on DMart from here on at least.
Okay, what about you, Aditya? Quite a few names in focus today, but DMart, one of them, the same-store sales growth just doesn't seem to be making the cut. And is that a concern? Is it quick commerce competition? Do you believe that is real competition for DMart?
So, Harsh, we've seen Jio going ahead and closing down a lot of stores across the country, and we are seeing a similar trend playing out with Avenue Supermart as well, where they are also struggling to grow the same-store sales growth per se. Mind you, Avenue Supermart is the lowest cost producer of most of the groceries that you and me really buy. Of course, the quick commerce concept is also there, but I don't think that quick commerce concept is competing with the lowest cost producers like Avenue Supermart. Quick commerce is really competing with likes of the Kirana stores that is there. The reality of it is that there's a little bit of slowdown that is going on, and we need to see if the festive season is able to revive that slowdown or not. But my perspective is the DMart stock is really tanking because the valuations were really very expensive, and at expensive valuation, if the growth just doesn't come about, then the stock would really tank. So I will wait. I will advise investors to wait and watch on this. The stock is already very expensive even after this cut, and there needs to be a recovery starting October, November, December, where the festive season sales really play out.
On festive season, Aditya, we've been speaking to all sorts of companies last couple of days, and most of them sound bullish. At least gold companies, consumer durables, all of them. So, can we really expect a big change in pattern by festive season, or is this sort of the optimistic side we're hearing from the retailers?
So I feel that it is really very optimistic side of it because on my ground checks, I've seen that even though companies are providing, let's talk about the automotive sector. Even though companies are providing huge discounts right up till October 31st, the car sales is just not picking up as they had expected per se, and that has forced many of the automakers, two-wheelers and four-wheelers, to cut down on their production per se. So it is a little bit of optimism, but then if you are in the stock market, you always have to be an eternal optimist per se and believe that there could be a change coming out. Also, the leading indicator to consumption picking up is the lending side of it. And I am not seeing practically any of the lenders reporting very good loan growth per se, neither in the MFI sector, neither in the retail sector, where companies like Bajaj Finance have also reported not that great loan growth sales numbers. So it is an optimistic update per se, but however, we need to remain optimistic and hope that there's some sort of recovery that comes about.
Yeah, no, of course, that hope is always there. Just to understand really, in the sense of what the concerns are, and especially on the financials, Aditya has spoken about it in some detail, but if you were to rank in a comparative, Aditya, from the business updates we've seen so far in HDFC versus the Bank of Baroda, and just in numbers terms, M&M Financial, Bajaj Finance, how would you rate them in a comparative scale?
So right now at this stage, I would stick to Bajaj Finance per se because Bajaj Housing Finance has come out and there's a lot of value delocking that has also happened. And slowly and steadily, the company will start to do really well. On HDFC Bank, a value investor can look at that company. However, they need to do a lot of work to bring down their loan to deposit ratio, which will happen over a period of time. So I don't expect any positive surprises this quarter. However, I do expect the management to bring down the loan to deposit ratio from about 115 levels to at least about 100% or so. So from that perspective also, a value investor
Sorry,
could look at
I'm going to
HDFC.
interject. How long do you think this is going to take HDFC to improve this? Because you've seen very sharp contraction. Last 2 to 3 quarters, the loan to deposit has come down from 112 to 100 now, 101 now. What would be that ideal number? Would 90% be the ideal number, and how quickly do they get there, in your view?
So historically, HDFC Bank has traded anywhere between 65 to 80% of their deposits per se in terms of the loans that they give out, and the market expects them to be somewhere close to that level in the longer term because that then de-risks the company massively. So how long will it take? In my opinion, it will take at least about 1.5 to 2 years for the bank to sustainably bring down that sort of loan to deposit ratio because the branches that they have put in will start to ramp up now and then they will start to get deposits per se. So it will take a certain amount of time, but however, the stock price will not wait for that long. At the first instance of margins improving, at the first instance of LDR coming down, the stock price will start to move up because the market will anticipate the change really coming about. So it is just a matter of time before the change starts to play out per se, and that's what we need to watch out for. And completing this part, MFIs seem to be the worst hit. Somebody like M&M or somebody like a Suryoday Bank, all of them have reported very bad asset quality. So that is the least favored pack right now, and you need to be very careful on the MFI side of it right now.
Kunal, what is the BTST call which you would recommend, and keeping in mind the kind of volatility we might see?
So, Tamanna, not exactly the BTST, but I think there are a bunch of counters which are available at very good levels. The first is Tata Power. Now, the futures of Tata Power is trading at around 470, and there was the breakout zone from where we saw the counter going up to almost 495 to 500 kind of levels. So, I think with the stop loss of 465, one can initiate a buy on Tata Power futures, and the targets can be 490 and 495. And the second is REC. I think REC has also come off significantly from the highs and available right onto the support. So with the stop loss of 520, I think one can initiate a buy on this. This is again a positional target which I'm sharing. The first is 570, and above that it can go to 595, 600 kind of levels. So both are offering good risk reward ratio from longs, can be taken for short term as well as for mid term.
Tata Power, REC in focus. What about an ONGC, Kunal? Has been bucking the trend. I mean, what is the energy play here? Because you're going to be seeing crude prices as rising as a theme now for the next few days. Is ONGC a good bet?
Yes, Tamanna. So again, this is the shortlisted counter, and honestly, on my screen, I can see the alert which is placed at 302. The counter is not able to cross that 302 mark itself, and it's been entire month of September. It's been in consolidation. If you remember, the previous week only we discussed about a strategy that is long on futures and short straddle. That can be a good strategy even for October. Because the trend is positive, the counter is well poised to take a run up from here. For aggressive traders, I think 302 can be a good trigger point. Above that, one can initiate a buy. And for those who want to play the derivative segment, I think short straddle, that is selling call and put, and going long on the futures with the stop of around 290 can be a good trade on ONGC. But yeah, overall, the trend is bullish. Initiating a buy above 302 would make sense.
Right. Aditya, let me come to you. Give us two of your top ideas and rationale very quickly if you can.
So my top idea right now is Bajaj Finance per se. We as a disclosure, we are invested in that stock across clients. We feel that a lot of time correction has already taken place within the stock, and this Bajaj Housing Finance IPO is really positive for the company. As the sector undergoes asset quality downturns, we will see that Bajaj Finance will come out of it on top, and they will continue to do extremely well. Idea number 2 continues to be Deepak Nitrite, where we feel that the chemical space will start to do really well by the end of this year and early next year, where the cycle would have turned, and the specialty investments that Deepak has already done will continue to bode well for the company. So one from the financial services sector and one from the chemical sector per se, where the turnaround is going to happen over the next 6 to 12 months.
Thank you for that, Aditya and Kunal. Thank you for joining us. Aditya still betting big on Bajaj Finance, which is probably closing as one of our top losers today, but it is a tough day. Good time, maybe, to take a bet there. But, as we wind up, 2 minutes to go, let's just recap for you what's been happening, because it's a tough market and there are reasons why it's been so difficult. Number one is, of course, Iran-Israel escalations. And for the first time in 5 years, the Supreme Leader of Iran has come out and given a sermon on Friday and has talked about the aggressive stance they're taking. Nothing less aggressive coming from Israel either. So that's one big concern. The second one, from the Indian market perspective, is disappointing business updates. I mean, whatever has come since the last couple of days has been below par in the BFSI space, in the consumption space as well. And that has muted expectations of what you could see in Q2. FII outflows continues to be a concern. And is this a resurgent in China where money is going? Are there other reasons why FIIs are exiting India in such large numbers? You had a 15,000 crore sell figure just yesterday. We'll have to wait and see, of course, what the figure is for today. Demand slowdown concerns are also very, very real, coming off what we saw in terms of September auto sales. Some business updates also pointing maybe to a bit of sluggishness for the next couple of months. So let's see how all of that is panning out. And looking on the Nifty, we'll pull up the Nifty intraday before we get to the heat map as well. And you're looking like you're going to close, all right, at least above the 25,000 mark. That's a bit of a saving grace, if anything. 200 points down on the Nifty, Bank Nifty about 0.5% down. Let's quickly pull up the heat map, and then of course Hersh comes in to tell you about what's happening in the broader markets. But over here, can't see too much of an improvement. Infosys holding up. You have tech stocks holding up. Wipro, Tech Mahindra. Nothing too much has changed in the last 1 hour or so in terms of this list. ONGC remains strong, but Mahindra and Mahindra now your top loser. M&M getting hit quite badly. Bajaj Finance not too far behind, 3% down as well. I would pull up the FMCG counters as a very clear pain point, and that's where the economic slowdown concerns come in. Look at a Nestle, Asian Paints because of crude prices as well, so I'll give it that. HUL also about 2% down. That entire pack feeling the heat. RIL again sliding over there, 1.5%. Trent, new entrant, not faring too well on the Nifty, nor is BEL. So your new entrants are also having a bit of tough time. And Hersh, I don't think broader markets are seeing any bit of a reprieve or any relative reprieve either.
No, not at all. There you go. The Nifty mid cap largely in line with the Nifty 50, and the Nifty small cap, we can pull that up. There you go. Largely again in line. The advanced decline, of course, not in favor at all. We're seeing sharp declines, but we've seen a lot of whipsaw pretty much through the day. And that's very evident. That volatility is really, really evident. Let's also pull up the BSE 500. Take quick stock of some names on the list. Thermax doing fairly well, 5% up. Home First also. Some of the housing financiers have done fairly well today. Home First and Aptus. Even a Bajaj Housing kind of held up very well in trade in an otherwise tough market. So maybe that's one pocket. Paytm down 5, so that's one other piece that one is to look for. But Amber, Gujarat Fluoro, Chambal and M&M Financial. M&M Financial just poor numbers, and Street clearly expressing disappointment on that. VIP also has done well, along with maybe baggage manufacturers.
Safari was also
Safari
doing
also
okay.
is
I just want to
okay.
take a look at how markets have performed over the week, and let's see if we can pull up at least the Nifty, Bank Nifty and mid cap over the week and look at. It's been a tough one, and look at that, down nearly 5%. That's the kind of knock you're seeing on the Nifty for the week. 5% hit, 4.5% hit. Not too much better on the Bank Nifty, 5%. People have been asking for corrections. Well, whoever asked for it has definitely got it. Yeah. In relative terms, the mid cap not too badly, at least 3% down. Now, the big question is, Hersh, what are we looking for towards next week? Next week is also going to be fairly volatile, and it's a big one because over and above all of this is whatever happens between Iran and Israel over the weekend. But then the RBI's fourth meeting, the monetary policy meet, no rate cut really expected. Counting of votes for Haryana and Jammu and Kashmir. Maybe these are some of the other factors as well.
Yeah, and you've got EIA, some short-term outlook on energy. So, of course, energy in focus on the back of that. And then we'll have quarterly earnings. We have Ireda, Tata Elxsi, TCS. So, a couple of Tata names as well as Ireda coming
Let's
out
be honest,
numbers.
TCS is the big one.
Yes,
the
TCS
whole
is
IT earnings jamboree begins, and of course,
Yes.
we'll be on top of that and everything else. But for now, that's all the time we have from Hersh, me and the team who put the show together. Thank you so much for watching.